Ladies and gentlemen, good day and welcome to Dixon Technologies Q1FY24 earnings conference call hosted by DAM Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Bhumika Nair from DAM Capital Advisors Limited. Thank you and over to you, ma'am.
Yeah, thanks. Good evening, everyone, and welcome to the Q1FY24 earnings call of Dixon Technologies. We have the management today being represented by Mr. Atul Lal, Managing Director and Vice Chairman, and Mr. Saurabh Gupta, Chief Financial Officer. At this point, I'd like to hand over the call to Mr. Atul Lal for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Thanks very much, Bhumika. Good evening, ladies and gentlemen. This is Atul Lal, and we also have on the call today our CFO, Saurabh Gupta.
Good evening, everybody.
Thank you very much for joining these earning calls for the quarter ended June 23. Coming to our overall performance for the first quarter, consolidated revenues for the quarter ended June 30, 23 was rupees 3274 crores as against 2855 crores in the same period last year, which is a growth of 15%. Consolidated EBITDA for the quarter was 135 crores against 101 crores in the same period last year, which is a growth of 34%. Consolidated PAT for the quarter was 67 crores against 45 crores in the same period last year, which is a growth of 48%. Our team's focused execution in a fairly challenging operating environment helped deliver strong earnings and 60 basis points improvement in the EBITDA margins year on year, led by operating leverage, cost optimization, and efficiency measures across all businesses, and also continued implementation of strategic price hikes across ODM businesses, both in washing machine and lighting. The financial position continues to remain very healthy, with gross debt to equity at 0.14x. Our basic approach to capital policy always has been to maximize the return on invested capital and financial ability. Our ROCE and ROE in the last quarter was 32.4% and 23.1% respectively as on 30th June 23, and we feel confident the same would keep improving in the upcoming quarters and years on account of improved earnings and working capital efficiency. Looking ahead, we believe that we have a platform to sustain an extremely strong revenue growth moving forward through the strengthening in the overall demand environment and also our balance sheet, and most importantly, new customer acquisitions and getting into new domains. Now let me share with you the performance and the strategy in each of the segments going forward. Consumer electronics revenues for the quarter were 882 crores with operating profit of 30 crores and 3.4% operating margin. Operating profit margins expanded by 70 bps year on year on account of operating leverage and continuous focus on backward integration, and also increasing the ODM share in our revenues. Revenues were 5% lower year on year as Q1FY23 in this segment also included 71 crores contribution from our AC inverter controller board business, which has subsequently been transferred to our JV with the Japanese company Dixon. Excluding that, the revenues in this business have been flat. We are on the way to roll out our Android-based solutions from Google by Q2 of the current financial year, and also we have entered into partnership with Samsung for their Tizen operating system, which will be rolled out in Q3 of the current financial year. As shared in the last call, we have now started our backward integration into injection molding, and the commercial production has already started. Further, our investments in the LED bar segment is on line, and we hope to start manufacturing LED bars for internal consumption sometime in Q3 of the current fiscal. We are also exploring new product range, such as commercial displays, which are used in public advertisements and information displays, and also interactive boards for use in educational institutes and offices. We feel that we should be able to roll them out by Q4 of this financial year. We already have some initial orders in this particular product category. Lighting. Revenue for the quarter was 222 crores with an operating profit of 19 crores and an operating margin of 8.7%, which is an expansion of 150 bps year-on-year, achieved through combination of reduction in input prices, inventory planning, value engineering, and significant initiatives in sourcing. Apart from sluggish consumer demand, the reason for the lower revenues year-on-year are high reduction in pricing due to drop in commodity prices and also migration of LED bulbs technology from driver-based to DOB, that's driver on board, which are priced approximately 25% lower. Since LED bulbs is the single largest category in lighting, it had an impact on our revenue growth. We have been very aggressive in new product introduction in the last 3 quarters and will continue the momentum with the launch of strip and rope lighting in Q2. This has already happened and the commercial orders have come to us. Also, we are working on professional lighting launches, which will happen by Q4 of the current financial. Also, smart lighting products are ready for commercial launch based on Bluetooth mesh technology by Q3 of the current financial. After getting export orders from the new customers in UAE in Q3 and Q4 of 22-23, we have received now export orders from Germany, which will be executed in Q2 of the current fiscal. We are also in advanced stages of discussion with potential customers both in US and UK. We have met our threshold investments in 22-23 under the PLI scheme for LED lighting components in line with our backward integration strategy, which will make us more cost competitive. And the new plant for LED lighting components in Dehradun has already started commercial production in May 23. The capital employed in this business has been reduced by 168 crores year-on-year on account of huge focus on current asset management, which has resulted in an improvement in ROC to 36% from 22% a year ago. Home appliances, the revenues for the quarter was 259 crores with an operating profit of 28 crores with expansion in profit margins to 11%. This is mainly by increasing in prices, improved operating leverage, and cost optimization measures. The ROC in this business also improved 30% from 25% a year ago. A new state-of-the-art facility of semi-automatic washing machine will be operational in a couple of weeks from now. In line with our backward integration strategy, we have set up our own tool room for in-house tool manufacturing, which is already operational. In our fully automatic top loading business, we have added Voltas Beko now as another anchor customer apart from Bosch. Supplies to Voltas Beko for fully automatic top loading have already started, and we have also expanded our customer base by including Lloyd, Reliance, and Panasonic in FATL category. These products to these customers are going to be launched sometime in Q3 of the current fiscal. We are investing increasingly on this segment, more on R&D, and we feel that the growth is going to be extremely healthy in this particular business. Mobile phones and EMS division. The revenues for the quarter was rupees 1795 crores, a growth of 38% year-on-year, with operating profit of 53 crores, with a growth of 61%, with an expansion of operating profit margin by 40 basis to 2.9%. We have got increased order book from Motorola for 1.3 to 1.5 million smartphones in Q2 as against 1 million in Q1. We expect the volume to increase to 2 million a quarter, including some large export orders from Q3 for the current fiscal. The large piece in this business is the new customer acquisition in mobile category, which I have been sharing. So one, we have acquired Transsion Group, which is the owner of itel phones, smartphones and feature phones, which is the 5th largest brand in India. We have already commenced production for itel for feature phones, which is approximately 1 million per month. And from the month of September, we start production for the smartphones, which is going to be almost 0.8 million to 1 million smartphones a month. Also, our production for Xiaomi for the smartphones is targeted to start sometime in September or early October of this year. Also, another highlight of our recent success is securing a large order of Jio Bharat phone from Reliance Jio. We've got an order for 15 million units. We've already delivered 1 million units, and this business looks very healthy. It's almost a 1,500 crore business for us in the current fiscal, for which the commercial production has already started. So this is going to be our major growth area, which we have been talking about earlier also. In order to meet increased demand of our customers and gain a large market share, we have leased a large 3.2 lakh square feet facility in Noida, in addition to our existing 3 facilities, and is expected to commence production sometime in mid-August next month. As we move forward, the next phase of growth, we remain focused on manufacturing excellence, quality, efficiency, and customer satisfaction. Telecom and networking products, revenues in this segment for the quarter under review was 102 crores. A new facility in Noida, it got operational in December 2022, is now getting stabilized, and we have an extremely healthy order book from Airtel. We have bagged a large order of AST Zapper set-top boxes and also Android set-top boxes, which is expected to start production in Q2 of the current fiscal. We have also got a large order from Jio for internet-based set-top boxes, which will commence production in Q3 of the current fiscal, and also 5G CP devices, which also will start production from Q4 of the current fiscal. In this, we are also a beneficiary of PLI. We have already achieved the thresholds of both CAPEX and minimum revenue the first year, and we have filed our incentive claims with the government. We are also in active discussions with some very large global brands for existing and new product categories, and building a team of joint R&D for both servicing the domestic market and the global markets. Laptops and tablets, IT hardware products. Revenue for this segment was 86 crores. The government has recently announced revised PLI scheme for IT hardware products with a higher incentive payout. We'll definitely be participating. Presently, we have Acer as our anchor customer in this business. We are in advanced stages of discussions with some very large global brands. We're very hopeful that these discussions are going to be positive and it's going to fructify into good business. Wearables and hearables, wherein we have partnered with both. In this segment, the revenues are 189 crores. We have an extremely healthy order book, and now we're clocking a monthly rate of almost 2 million devices per month. Recently, they have placed order on us in addition to TWS of all the smartwatches, for which the new line is being set up and will get operational in another couple of months. We are targeting to almost double our 50% share in revenues with healthy operating margins and superior ROCE in this business. Also, as a part of our backward integration strategy, we'll start the SMT of PCBA in the current financial year. Security surveillance, Dixon's 50% of shares of revenue was 114 crores. We expanded our capacity from 10 million per annum to 14 million per annum in our new 2 lakh square feet facility in Kupurthi, which got operational on May 15th of the current fiscal. Operating profit margins in this vertical have come down, mainly due to shifting expenses and the 2 cost structures running. It will get optimized in a quarter or so. In our JV with Rexon, they can be manufactured an inverter controller board for air conditioners. In this JV, we achieved the revenue of 9 crores. The revenue potential in this business is huge because we've now also got the export opportunity of this particular SKU from Europe and also from Latin America. In this business also, we have achieved the CAPEX and revenue thresholds of PLI, and the claims are being filed. Refrigerators, the construction is underway at the new 20-acre facility in Greater Noida for 1.2 million direct cool refrigerators. This is in the product categories of 190 to 235 liters, and we are expecting to start commercial production in Q3 of the current fiscal, sometime around October. I would like to stop now and look forward to answering your questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Dhananjay Barodia from ASK. Please go ahead.
Hi, sir. Just wanted to ask you regarding your margins. Q1Q across segments, we've seen a margin dip. Any reasons particular on that? Hello?
There is no particular reason, Dhananjay. See, basically, if you look at the whole margin profile across 4 quarters, Q1 is generally slightly slower quarter for the consumer durable business. It's basically the investment goes into the AC business, the cooler business. So it starts to pick up in Q2. Q2 generally before the festive season is the best quarter for us. Q2 and Q4 are considered as the best quarters for us. So historically also you will see that Q4 margins would always be higher than the Q1 margins. And then there can be a kind of a mixed kind of impact also. Where this quarter we had higher revenues coming in from, basically I think so this would be the reason.
Okay, sure. And sir, now as we're seeing in terms of lighting and consumer electronics, for consumer electronics, what would have been the reduction in open sale prices?
Year on year, if you look at consumer electronics, the prices have actually gone up from last year because the reduction had already started to happen from the first quarter. So last year, the weighted average selling prices for our entire portfolio was around 11,400 rupees, and this quarter we have closed at around 12,000 rupees. Now, why it shows a decline? There are 2 reasons for it. One, last year we had some sales of our AC inverter controller board, which also was reflected in the consumer electronic business, which was 71 crores, and then from there onwards we started the JV with Rexam, and which is now no more there in the current Q1 numbers. So that's a 70 crore kind of impact. And also the volumes have been lower. So quarter one our volumes have been lower by almost 6-7%. So as against 7.7 lakh TVs that we sold last year, we sold around 7 lakh TVs this year. So majorly it is volume and the impact of the EPC number.
So sir, you said volume reduction of 7% year on year, right?
7%, yeah.
Okay. And how is that shaping up now?
5%, sorry. So we sold 7.4 lakh TVs last year, and this quarter we had sold 7.1.
And sir, lighting, so regarding that reduction?
Lighting, there are 2 reasons. One, of course, there has been a big, so as mentioned by Mr. Lal in his remarks, there has been a big value erosion in our LED bulb, which is almost 65 to 70% of our portfolio today, and there has been a value erosion of almost 25%. And overall, the market has been very slow as far as the lighting products are concerned. So these 2 are major reasons why our revenues look lower in lighting.
Okay, sure. Thank you.
Thank you. The next question comes from the line of Rahul Gajare from Haitong Securities. Please go ahead.
Yeah, thank you for the opportunity. I have 2 questions. First, on your mobile phone. Now, after your recent tie-up with Xiaomi, could you discuss the roadmap of manufacturing for Xiaomi in terms of, the volume that you're expecting, the kind of capex that you might have to do for this particular tie-up? And also, if you can talk about, if there is any discussion with respect to manufacturing of, the Google Pixel phone also, given that they also want to manufacture in India. So that's the first question. Thank you.
So on Xiaomi side, the capacity creation and infrastructure setup is on. The teams have been sent for training. The IT infrastructure is being set up, and our target is to start production sometime in mid-September. But I think it's going to start in a couple of weeks here and there. And the initial plan is to reach up to a production level of 500,000 per month. That's what we have planned for. And then step by step it's going to be scaled up in the next phase to almost 1 million. On the second question, there is, when you're talking about Google Pixel, there are certain confidentiality clauses, and I'm extremely sorry, it will be difficult to share the details of that. Yeah. Okay. On Xiaomi, this is the roadmap.
Appreciate. But when you said you want to ramp up from 0.5 million per month to 1 million, so how much time will this ramp up take?
So there is no timeline being worked out on that. It is on the execution of the phase 1, which is 0.5 million. I feel that it's going to take around 8 months to a year to ramp it up to the next phase of 1 million.
Okay. Sir, continuing with this mobile phone question now, in this particular quarter, if we were to remove the variable set-top box, telecom, etc., the growth of mobile has been only about 6%. So could you throw some light on that? Thank you.
So please appreciate the Motorola production has been kind of flat. It's 1 million units. In the other mobile segment, the significant increase has come mainly on the feature phone side. The second quarter, the current quarter, the order book of Motorola is much higher. We are targeting almost 1.3 to 1.4 million. And also the bulk of Jio Bharat production and also the ITEL feature phone production would increase the numbers. And these numbers would significantly go up from Q3 because the Motorola production increases, the ITEL production increases, Xiaomi's production come into play, and also Jio Bharat's production come into play. And also Nokia, the present run rate is almost 1 million phones a month. It's going to go up to almost 1.4 to 1.5 million.
So my last question is on the refrigerator. So you did touch upon some aspects of the refrigerator, but maybe I missed some of those things on the refrigerator plan. So in terms of, capex, capacity, the payback or the target ROI that you have in mind as far as the refrigerator business is concerned. Thank you.
So we are making a capex of almost 400 crores in this business. We are creating a capacity of 1.2 million DC refrigerators, which is with the capacity of 190 to 235 liters. The commercial production is going to start sometime in the October-December quarter. We already have certain committed offtakes from certain large brands. We're getting into strategic relationships. And the payback period for this business is going to be 4 years. And the ROC we are targeting, this is an ODM business, is going to be 20% plus.
Thank you very much, sir.
Thank you. The next question comes from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good evening, sir.
So
my question is on the opportunity from IT Mobile. How large is the opportunity? Because 0.8 to 1 million units per month sounds like a very, very large number. Are we going to do the complete assembly of the mobile phones, including PCB assembly, or is it going to be more of a job
No, it's going to be complete assembly, Aditya. And you know that ITEL is the largest manufacturer of feature phones in India. So largely 100% of their feature phones, which is somewhere in the range of 1.3 to 1.5, will be done at Dixon. And also the smartphones are going to be done at Dixon. So it's a fairly large opportunity, somewhere in the range of around 5,000 crores a year.
Aditya, if you look at the last reported numbers now in the March financial last FY 2023, they delivered a revenues of almost 6,500 crores. So that is the opportunity pool that we have.
Sure. And almost entirely everything is going to be done by Dixon.
That's what we are aspiring for. It's going to be in phases, but that's what we are aspiring for, and that is the capacity we are building, other steps.
Understood. And ITEL is not the second customer that we were aiming for. That's something else.
No, that's the second customer.
So Xiaomi and ITEL were the two customers that we had spoken about in the last conference call?
That's right.
Okay. Understood. So my second question is on the lighting business. Wherein we see targeting to grow our patterns and downlighters business for the last few quarters, but it appears that we are not really seeing a major success out there. So just wanted to understand what are the constraints, because I would have thought that these are similar customers and therefore a ramp up could have been faster.
So I would say customer acquisition in any SKU, even if it's your existing customer, it takes some time. So please be rest assured that team is at it and it's going to happen and we're getting a positive traction. It's going to take some time, but step by step we are moving toward it. I agree with you entirely that we are a bit slow, but we are confident about it. The R&D team is extremely sure about it. We are getting a very good response on the SKUs that we have launched. It will happen. It's slightly slow, I agree with you.
Understood. And also on the export opportunities, sir, because you spoke about some contracts from Germany and possibly later from US and UK. How are you looking at it? How large could it be for this year and maybe from 2 to 3 years perspective?
The Germany trial order is under execution. US, UK, it's in advanced stages of discussion. We are confident. But at this stage, to give a number to it, I think it would be slightly premature. So that's the stage at which we are, I would say.
Understood. And how large should we assume export opportunity for this year and from a 3-year perspective, sir?
So in the current financial, it's going to be a small opportunity. But if we are able to get breakthroughs, which we are fairly confident about, both in Europe and US, it can be a large opportunity, which can be built into 80 to 100 crore business in a couple of years.
Sure. Perfect. That's helpful. Thank you so much.
Thank you. The next question comes from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Hi, sir. My first question is on the Xiaomi onboarding. So you have onboarded that client for mobile phones, but I've also noticed that one of your competitors has seen wallet share from Xiaomi decrease while yours has increased. So I want to understand at an EMS level, is it just a broader diversification that the players do, or are you offering some favorable terms that has led to this shift from one of your competitors to your books?
So I think it's a combination of very many things. It's a combination, of course, of a better commercial case and also Dixon's capability to deliver. So it's a combination of both things which leads to such moves.
All right. And so my second question is on the Xiaomi TV segment. So can you just give us any growth expectation there? Has the budgeting been done for this year?
Has been slow, and there is the Xiaomi piece. We expect this year to close at somewhere around 0.8 to 0.9 million, of almost 30%. The Xiaomi's overall TV business there has been a slowdown.
All right. And so my last question is, since you must have done your annual budgeting by now for your segments, so can you just give us a broad guidance for your FY24 numbers? And also if you could give segment-wise volume data for this quarter, if that's possible.
So, as far as the revenue is concerned, we don't want to give any guidance, but please be rest assured it will be an extremely good growth, much ahead of the industry growth. On the volume side, I'll request Saurabh to share his numbers.
Just on the guidance side, of course, we don't want to give any numbers, but clearly a lot of things have changed positively for us, especially on the mobile business. So things are looking positive. I'll check the volume number with you. So on TV side, as I mentioned, we did a volume of around 7.4 lakhs as against 7.1 lakhs last year. 7.1 lakhs this quarter as against 7.4 lakhs. LED, the semi-automatic washing machine, we did around volumes of around 3.9 lakhs, which is a growth of 10% against same period last year. Last year we did around 3.5 lakhs. Fully automatic was broadly flat. There was small degrowth in fully automatic washing machine, but we have a very strong order book now with Voltas coming on board. Smartphones, there was a growth outside of Samsung smartphones. With other smartphones, we had a growth of 3%. We did almost 11 lakh smartphones. We did almost 34 lakh smartphones as against 8.5 lakh smartphones. In case of Samsung specifically, we did almost 20 lakh smartphones, similar to last year. And then the CCTV DVR, we did a volumes of almost 19 odd lakhs. And then there are smaller numbers of set-top box. TWS, which is the variable enable part of the JV, is around 37 odd lakhs.
All right. Thank you so much, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Ankur from HDFC Life. Please go ahead.
Thanks as always for your time. So starting off, in terms of the overall demand environment itself, especially in case of TVs, lighting, home appliances, slash washing machines, obviously it's been a kind of a soft quarter for us. But clearly, how are you seeing, the overall industry and also, your order books as we get into festive, maybe a couple of months down? What is the feedback you're getting from some of your key customers there?
So Ankur, it's mixed kind of a bag. Now, in the categories of television, the demand is flattish. Similarly, in lighting, the demand is flattish. There is some uptick around the forecasting for the festive season, but it still is flattish. In washing machines, in our case, both in semi-automatic and in fully automatic, the order book is extremely healthy. In the case of mobile phones, I shared just now, the order book in our case is extremely healthy, but this is mainly because of new customer acquisition.
Sure.
Also increase in volumes for both Motorola and Nokia. The sense that I get from our customers that at the marketplace there has been some uptick, but still the demand is subdued. One category in which there is an extremely good demand is that of wearables and wearables. And there the order book is extremely healthy, and we have in fact ramped up our capacities to almost 2.7 million devices a month. And a year back we were barely at 0.6.7 million. So mixed kind of a bag. In case of CCTVs and DVRs, again the order book looks healthy. So to summarize, in some of the product categories like TVs and lighting, it's subdued. In washing machine, our order book is very healthy. Mobile is very healthy. CCTV is good. And also the hearables, wearables. So this is the kind of situation.
Fair. And sir, on the volume growth target for this year, I think you mentioned a number which I missed. I think the voice wasn't very clear on TVs. So what would be the growth number or the absolute volumes you're looking at for this year in TV?
So we did 3.4 million in the last financial year.
Yeah.
In our annual budgets, we have taken a number of almost 3.7 million, which is 10 million. So we have done almost 0.7 million, and the order book looks better. But let's see, one is keeping the fingers crossed. It depends on how the festive season goes.
It depends on this quarter too. That will really determine what number we close at.
Sure.
Also in this fiscal, Diwali is on 17th of November, which is slightly late. So it means that Q3 also the demand should sustain.
Right. And sir, I remember a couple of quarters back, you spoke about monitors also becoming a fairly large opportunity. Is there anything to report there? Is there scale up happening on that side?
Monitors for Dell, and the commercial production is happening. But what is being produced in India with Dixon for Dell is largely for the government buying. So there, the order book is very moderate.
I understand. Okay. And just some last question on the IT hardware PLI, right? And I understand, things are still under discussion and getting finalized. But which are the specific areas we would be targeting on the IT PLI side?
So we are in discussions with some large global brands. And as far as the product categories are concerned, we are focusing mainly on notebooks. But along with that would also come the desktops and also the tablets. But the main production is going to happen on notebooks.
I understand. Got that. Okay, sir. Great. Very helpful. Thank you. All the best.
Thank you. The next question comes from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So, now that we've signed multiple customers in mobile phone segment, just wanted to understand which customer would be in the ambit of PLI scheme and which would not be.
So, Dhruv, everything will be part of the PLI scheme except for the Samsung smartphone business that we do. Apart from that, everything falls under the PLI.
Okay. And just a clarification on the consumer electronics business. So we've seen a sequential decline in the ODM share. So is it seasonal or something's changed there?
So year on year, the numbers of ODM have gone up. The percentage of ODM has gone up. If you're talking from quarter 4, yes, it would show a decline, but my sense is only a phenomenon of this quarter. As we start to roll out our solutions both on Android and also on Tizen Samsung operating system, I think so the numbers would start to go up. So this year we are expecting that this year the number should be above 40% at an annual level. But once we start, so by Q2, Q3 it should start reflecting at those kind of numbers.
So in TV business, the maximum growth is going to come in our case from our ODM business.
Okay, sir. And just one clarification on this new ITEL business that you guys have won. So just wanted to understand what will be the quantum of the smartphone volume in that piece apart from the feature phone volume that you spelled out earlier.
So Xiaomi is completely smartphone. And in the case of
ITEL, yeah.
In the case of ITEL, the smartphone volume should be in the range of 0.7 to 0.8 million a month.
Okay, sir. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Girish from MS. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, just a couple of things. So, wanted to understand your mobile revenue guidance for the year. Sorry, my line was a little bad. So, for the full year, are you planning the same 8,000 odd crores for this year?
So, we don't want to give any specific guidance for mobile as a vertical, but it will be the largest piece of growth for us. Also, please appreciate that the manufacturing has just started, and any ramp up, it takes some time. So it undoubtedly will be the largest growth driver for us, and it's a larger opportunity in our favor.
Okay. And can you comment on Xiaomi's volumes that you would be doing typically for this year whenever you start doing it? What will be the annual volumes for Xiaomi? Because they've been losing market share given the regulatory issues that they had. I don't know if the worst is behind, but just wanted to understand how much volumes have they committed to us.
So as I had shared in response to earlier question, that initially we're starting off with 500K a month, and we feel that in phases it can be ramped up to 0.8 million to 1 million a month. However, that's linked to our execution. So that's the roadmap.
And last one for Saurabh was just on CapEx. So we've incurred about 110 crore odd this quarter. Should we assume a 400 plus crore kind of CapEx this year, or if you have any specific number to share? And any breakdown would be helpful.
Girish, yeah, that would be the number. So around 400 to 420 odd crores should be the number that we have budgeted for this year. And broadly, the CapEx that we will go into the mobile for expansion for a new customers of Itel and Xiaomi. Second, on the refrigerator project. Third, we are also constructing and will be operational in August only, our facility, new washing machine facility for semi-automatic. So there, and then whatever committed CapEx is under the PLI for IT hardware or for telecom, those would be there.
Thank you so much.
Thank you. The next question comes from the line of Bhumika Nair. Please go ahead.
Yes, sir. Just wanted to, check on lighting. You did mention that, the market has been quite slow and weak. But just wanted to get a sense in, what is the outlook because, is the pricing erosion still continuing? How is the volume growth that we are looking at? So if you could just first talk about this aspect, and then I'll get into the other aspects of the lighting segment.
So, Bhumika, as Saurabh had shared, one, the market has undoubtedly been very subdued on the consumer lighting side. The demand has been extremely under pressure, particularly for the SKUs like LED bulbs and battens, in which were the largest contributors to our revenues in lighting. The second is because of migration in technology, particularly on the LED bulb side from driver to DOB based. There has been a price erosion to the extent of almost 30%. So the unit value is also eroded. Now these two combined have led to an impact on the lighting business for the industry, and so is the case for Dixon. So what is the way forward? The market trend is shifting more towards the downlighters and ceiling lights, and that's what we are gearing up for. Then also we have launched a new product category which is having a significant traction in the market of ropes and strips. They have been commercially launched, and we feel that that can be almost 80-90 crore business for us in the coming quarters. 80-90 crores on annualized basis.
Right.
And third large piece that in Dixon's product portfolio we have missed out is on the professional side. So we have strengthened on R&D, particularly with Kunal, who was heading Philips R&D, coming in and heading our R&D. So those product launches are being planned. Then we had gone in for an acquisition of a smart lighting design company, IBAN, which has already been operationalized, which is based on Bluetooth mesh technology. Those products have also been prepared, and we commercially launched them sometime in Q3, Q4. So these are the actions taken, which hopefully will get the lighting business back on track. On the other side, we have consolidated our footprint. We are a part of a PLI for which the thresholds both on investments and revenues have been met. That will expand our margins. We have expanded our margins as compared to last year by almost 170 pips. We've really focused on capital efficiency, and the ROC has significantly improved in this business to 30% plus. And by managing the current assets better, we have released almost 140 crores in this business. So these are the initiatives taken, and this is the path we're going to pursue.
Sure, sir. Sir, this ropes and strips and professional lighting, how large is the market size? What can it be? Because, clearly the traditional LED, as you said, is under tremendous pressure. But these new segments can become how large? How large is our addressable market, etc.? If you can just throw some light on that aspect. And lastly, on the, you spoke about some trial orders in Germany, etc. How large are these orders currently, and what can they potentially scale up to in a period of 2 to 3 years?
So we feel that the strip and lighting business, strip and rope business can add to our top line almost 5 to 6 crores to start with, and then it can scale up. On the professional lighting side, please appreciate it, almost 40% of the Indian lighting industry is on the professional side. So that's what we are getting into. That was a complete miss out in Dixon's product portfolio. It's going to be slightly slow, but we hope to launch these products sometime in Q4 of this financial year. Now that's a big opportunity, but it's going to be scaled up step by step. On the export front, the Germany trial orders are in the process of getting executed. We feel that both European and American opportunity in a couple of years can be 100 crore business.
Sure. Great, sir. I'll come back in the question queue. Thank you so much.
Thank you. The next question comes from the line of Abhishek from DSP. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, if you can just talk about the competitive intensity, mostly in the TV and lighting segment, in terms of how is the competitive landscape? Is it deteriorating, improving, stable? Just your thoughts there will be helpful, sir.
So when we're looking at TV, have we lost any market share? Has there been any significant customer shift from our side to competition? No, that has not happened. There has been some competitive intensity increasing because of a multinational entity setting up an EMS base in India. But till now, has it had any significant dent on our business? No. That's about TV. When we are looking at lighting, definitely the competitive intensity has increased. There are a couple of players who have increased their presence, which might have had some small impact on our market share. Not so much on the bulb side, but on tubelight side, yes. So that's the status.
Great, sir. So the other thing is, what are the broad utilizations where your new factories are, because in last 18 months you've done a lot of capex, and how should one see the impact of operating leverage as you scale up revenues from this, 12,000 crores of top line in FY23? When you scale up, how should one see the impact of operating leverage into the margin profile? If you can just help us with that, sir.
So if you see, across all our businesses, the margin profile has improved. And it is primarily because of scaling up and generating an operating leverage, and also migrating to more and more ODMs, and also the backward integration piece. So you'll see that in the case of washing machines, at some point of time, we had come down to around 7.5%. We have been able to restore it to 11%. Partially, it's because of value engineering and also scale. And now with new factory becoming operational, we feel it's going to add up to our operating leverage capabilities. In televisions, we generate an ROC of 100% plus. We have managed the gross blocks very, very well. We have managed the capital efficiency very, very well. And now, two backward integration pieces are going to be operationalized. One is the injection molding plant has already become operational. It's going to help us improve in our margins. Second, the LED bar, which is also an important input into a television, is also going to get operationalized sometime in Q3 of the current fiscal. So that helps us in further improving the margins in this business. Now, definitely the largest piece in our business is the mobile opportunity. And it's going to be scaled up to a very different level. With that kind of a scale coming up, operating leverage will definitely kick in. Initially, it's going to take some time, possibly a couple of quarters, because any ramp up, it takes some time to stabilize. But I feel the operating leverage will kick in on Q4. In the case of wearables and wearables, wherein we've upped the production from around 0.6, 0.7 million pieces, and this current month we're going to do 2.7 million pieces, you'll see that getting reflected on numbers from the current quarter itself. So that's the situation.
Great. So just one last question from my side on the Xiaomi bit of it, in terms of, the whole protocol of getting the product approved and other things. Are those processes simultaneously going on, or once the capacity comes in, then it happens and then will they ramp up? If you can just help us with the sequence of events.
So we are at a very advanced stage of execution, and the target date for launching commercial production is September. But let's see, it's a tough call, but that's what we are targeting.
But to answer your question, Abhishek, all those processes are going on parallelly.
Sorry, your voice is not clear.
I'm saying all those processes, some of them have been concluded also, and some of them are going on parallelly.
Okay. Okay, sir. Got it. Wish you all the best. Thank you so much. Thanks.
Thank you. The next question comes from the line of Rahul Gajare from Haitong Securities. Please go ahead.
Sir, thanks for the follow-up. Building on the earlier question, with respect to ITEL, which is a new client that you signed up. Can you discuss who was manufacturing for ITEL earlier? And since you are talking about, starting with a volume of, 0.7 to 0.8, do you see ITEL becoming, bigger than Xiaomi, over time for Dixon? So that's the first question.
So presently it's their in-house manufacturing. It is going to be which is being outsourced to us. Responding to the first part of the question.
Transition, right.
Which one is going to be larger, only time will tell. We want all of them to be larger than each other. Yes.
Okay. Sir, with respect to, the total mobile revenue, almost 6,500 crore, how do you break this up into, the smartphones and the feature phone? That's the last question. Thank you.
Almost 80-85% of the revenues are going to come from the smartphones only.
The average selling price for a feature phone would be somewhere in the range of 500 to 800 rupees kind of a number. So significant portion will still come from smartphones.
Almost 80-85% of mobile revenues will come from the smartphones.
Okay, fine. Thank you very much. It's very helpful.
Thank you. The next question comes from the line of Alok Deshpande from Nuvama Institutional Equities. Please go ahead.
Yeah, good evening, gentlemen. Thanks for taking my question. First question on the mobile production ramp-up that the roadmap that we have for the next 12, 18 months. I just wanted to understand the new production that will come. While I understand there'll be operating leverage, but just wanted to understand whether, given it's a very large size contracts and multiple contracts, will they be at similar margins as the current margins or lower margins, higher margins? Any color that you can give on that?
So the margin profile of the business will be somewhere in the range of 2.3 to 2.7%, something like that.
Okay, this is EBITDA margins here, you mean?
Talking about operating margin. But in this, there will be no working capital intensity. It will be minuscule.
Understood. And my second question is, do you have any plans of getting into manufacturing of, medical equipment, etc., which is slightly sort of going away from the consumer electronics part?
Not as of now.
Okay, sure. Thanks, and all the best.
Thank you.
Thank you. The next question comes from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Sir, thanks for the follow-up. I just wanted to understand a little more on the refrigerator segment. So, assuming that it starts from Q3 for this fiscal, and since you've already started putting up the capex, you must be in talks with certain players. So, can you give us a sense as to how the ramp-up will happen here? What kind of volumes can we expect this year?
So, Natasha, the commercial production we are targeting in quarter of October to December. But please appreciate, refrigerator is a complex product. It's Dixon design product. And the approvals, because the brands that we are talking to are large, global and Indian brands. It will take some time for the technical approvals to come in. The commercial production will start. To put a number to what volume we'll be doing this year is slightly premature. But finally, what we aspire to do is almost 0.8 million to 1 million units in the next financial year.
All right, sir. So that was all. Thank you so much.
Thank you. The next question comes from the line of Aditya from Retail. Please go ahead.
Hi, thanks for taking my question. Given the thrust that our government has on semiconductors and PLIs and so on and so forth, what is your outlook for Q2, Q3 and Q4?
Sorry, I didn't understand the question. Can you come again, please?
There has been a fair bit of incentivization from our government, right, in terms of getting more SMT production into our country. These are coming in terms of creating a better ecosystem for this kind of industry, as well as giving PLI incentives. So, what would be your outlook for Q2, Q3, and Q4?
I don't know whether we have understood your question correctly. Are you talking about specifically the semiconductors, or you're talking about a general PLI scheme?
PLI specifically, as well as the other initiatives taken by the government. I'm talking more from sourcing, having more, ease of norms on sourcing specifically to boost production in India.
No, I think that's going to take some time. So the government semiconductor policy, the foundation is being laid only now. But for it to start commercial production and how much is going to be sourced within Dixon, it's a very difficult question to answer at this stage. In any case, if at all it happens, it's going to take a lot of time.
Okay. What is the outlook for Q2, Q3 and Q4?
So we are not giving any guidance, but please be rest assured that the order book that we have, and particularly in certain product categories like mobile, is going to be a fairly aggressive.
Okay. Any numbers you could go in terms of mid-teens, high teens?
Sorry?
Any number that you could get for mid-teens or high teens?
No, we don't want to share any particular numbers. Really, the visibility looks good. Especially, we've got some large orders which we have mentioned on this call, but we don't want to quantify the numbers, please.
Okay. Thank you.
Thank you. The next question comes from the line of Aditya Bharatiya from Investec. Please go ahead.
Hi, sir. So just wanted to confirm, for these new mobile phone customers, you mentioned that the margins are likely to be 2.3 to 2.7%?
That's right, Aditya.
And this would include our share of PLI benefit as well?
Yeah, this is on a gross basis.
Perfect. And could that also mean that for our existing customers also there may be a margin reset at a lower level? What I'm trying to understand is it that the segmental margin or the overall on the mobile phone business, still margins will get reset at maybe around 2.5%?
So if you see the margin profile in mobile business, if you take the Samsung business, somewhere has been in the range of 2.7 to 2.9. So I'm being slightly conservative, that's all.
Understood. So you're saying that pricing and margins are broadly similar to how they've been for the existing business.
That's right.
And you're just putting in some cushion.
That's right.
Understood.
Absolutely.
Sure. Thank you.
Thank you. The next question comes from the line of Amber Singhania from Nippon India Asset Management. Please go ahead.
Hi, sir. Thanks for taking my question. My first question is regarding the JV with Tino Group. If you can share the status, how that is panning out, and have we started manufacturing for them? What is the timeline, and are we sticking with that 1,500 crore kind of revenue contribution from Tino Group once it is fully operational?
So we have filed our application with the government for Press Note 3 approval. It's taking time. We have still not got the approval. So we're waiting for that clearance to happen to start the project.
Okay, and any estimated timelines, sir, which we can see for the production?
We are working with the government, but Press Note 3 is time-taking and it's slightly complex regulatory initiative of the government. So I think we'll have to wait for some time on the Tino business.
Okay. And secondly, just a clarification on ITEL business. You mentioned on one of the participants' question that earlier they used to manufacture in-house, and now that entire thing has shifted to us. So just wanted to understand, is it only because of the PLI benefit the shifting has happened, or there is something else? And what will happen to their idle capacity? Are we also looking to acquire those facilities in the due course?
So PLI definitely is one of the reasons. And also more and more brands strategically are looking at outsourcing their manufacturing. So it's a combination of both the factors. Right. On the second part of your question, the discussions are on.
Okay. And just one adding up question on that. Their total revenue, which you mentioned around 6,500 crore, if you can give some color about how much pieces of smartphone they used to do and how much feature phone they used to do.
So almost 70% of the revenues are coming from the smartphone business.
Okay. And this would be a similar realization than what we are doing for Samsung or Xiaomi.
Sorry?
These smartphones are also of the similar realization what we are doing for Xiaomi and Samsung, or it is a lower-end smartphone?
So Samsung is not on a revenue base, it's more on a consignment base. There we don't book such kind of revenues. And Xiaomi, of course, it would be broadly or slightly higher as compared to the ITEL smartphones.
Okay. Fine, sir. Thanks a lot. That's it from me.
Thank you. As there are no further questions, I would now like to hand the conference over to Bhumika Nair for closing comments.
Yeah, I would like to thank everyone for being on the call, and particularly the management for giving us an opportunity and answering all the queries of the participants. Thank you very much, sir, and wish you all the very best.
Thanks very much, Bhumika, and thanks, ladies and gentlemen, for being on the call. Really appreciate it. Thank you.
Thank you, Bhumika. Thank you, everybody.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.